In this video, I'm going to show you how to trade the right order blocks using smart money concepts. These techniques will help you enter and exit the market with ease and make more profitable trades. So if you're ready to take your trading skills to the next level, then stick around until the end of the video and I'll show you exactly how to trade order blocks. So what is an order block? Well, a bearish order block can be seen as the last up candle before the down move, as you can see here. And a bullish order block is the last down candle before the up move. Now, bullish and bearish order blocks can also be seen as supply and demand, where a bearish order block can be seen as a supply zone and a bullish order block can be seen as a demand zone. Now, not all order blocks are created equally, meaning not all order blocks will work out in your favor. Now, if you've been trading order blocks and you've been struggling, I'm pretty sure that they failed for you time and time again. And that's a reason for that, because there are three key elements that you're not paying attention to choose the highest probability setup with your order blocks. And I'm going to feast your eyes on them right now. First thing you want to look for is the Asian low and the Asian high and the true opening price, which is that midnight hour. So what you want to look for is either the Asian low or the Asian high to be taken out first. In this example, the Asian high was taken out first, which purges buy side liquidity here. And the next thing, that's the first thing we look for. We look for a purge of liquidity or a sweep of liquidity, whatever you want to call it. We got that purge or that sweep of the Asian high of liquidity. Next thing I want to see is this little mini structure formed here. I want to see this structure broken, which we actually get a break of this structure here. And as this structure breaks, we also get a sweep of the Asian low, and then we come right back into this bearish order block and we get a nice short position here. So with little to no drawdown. Now, we are on the 5-minute time frame and we're trading Euro USD. So you will get a very good risk to reward ratio here if you made like a 5 pip stop loss, just to cover spreads and things of that nature. And this could easily be, you can target the opposing order block right here, this bullish order block, as a target, as another demand zone, right? That one right here is a 1-to-6 risk to reward ratio. Okay, you got 30 pips on that, you risk 5 pips, easy money. Now, this demand zone here, now this wouldn't be necessarily a trade that I would look to take if I've taken that bearish order block, especially since we purged the Asian high so convincingly and we broke that structure. I would have been out of that trade. I wouldn't have counter traded that, which there are some people that can do that. And that still would have been a good trade, because you could have gotten, I would say, if you traded that, put it below here, could have been another 1-to-4, 1-to-5 type of trade, but that wouldn't have been that wouldn't be a high probable setup for me. Okay, so the next thing I'm looking for after that trade is taken, that happens during the London session. Okay, now once I take my trade in the London session, that was the London setup. Now, if I'm going to trade New York, what I'm going to do is I'm going to wait for the same situation to unfold. Okay, so we get a purge of liquidity here, and then we left with this whole area. Now we're on the 5-minute time frame, but I see an order block right there. Okay, so we get that break. We get that break of structure right here. We get that purge. This whole little area here is just a purge of liquidity, of sell side liquidity. We get that break of structure, and then we come back, we return to this demand zone, a bullish order block, and now, and this is at 8:45 a.m., you would take this trade. So this is right around the New York Open. So you would take that trade there. You can take it at the wick, which I would probably take it at the wick just based off of the structure of this order block. Now you could take this. This could be considered the entire order block as well. Like you could take it there, eat a little bit more of a drawdown, but if you want a sniper entry and you want to get that low stop loss, that 5 pip stop loss, which, you know, I recommend at least a 5 pip stop loss on any instrument you're trading, to be honest with you. I know there's some people that can trade, you know, they trade with 2 pip, 3 pip stop losses, but in my experience, it rarely works out that way. But with this trade, you know, you're gonna trade each opposing order block. So you got another order block in this area right here. So this would be where your first TP would be. Okay, that's a 1 to 8 right there, risking 5 pips, getting 40 pips on that trade, and that was in a matter of, you know, an hour or so. And the trade continues to run, obviously. So those are the things that you want to look for. You just want to look for clear purges of liquidity, of buy side or sell side liquidity, which I showed you. I showed you a bearish setup. I showed you a bullish setup. You're looking for a bearish setup. Once again, you're going to look for buy side liquidity to be purged. For a bullish setup, you're going to look for sell side liquidity to be purged. And then you're just going to wait for a break of structure, and then you're going to wait till for price to return there. Now, another key thing, what you can do is you can also add your Fibonacci to this. You can add your Fibonacci, and that will also give you extra confluence or confirmation on where you should enter on the order block. So as you can see here, the 61.8 level was right at the top of this level here, which if I go to the higher time frame, like a 15-minute, you'll see this as a full order block, right? So you'll see that as a full order block. So you could have actually taken a trade there. Your risk to reward would have been a little tad bit different if you would have took it there. But you would have gotten, with the same target, you would have gotten a 1 to 3. Yep, you would have gotten a 1 to 3 there. So by taking it on the 5-minute time frame, you was able to increase your risk to reward ratio. And on high volatile pairs, such as Euro USD, major pairs like Euro USD and GBP USD, it's very easy to get these high risk to reward ratios on these type of pairs. So add this to your repertoire. Add the fib if you want to. I actually add the fib a lot, and it actually helps with that extra confluence. So that's a good way to add it to your trading plan. So be on the lookout for the next video. Also, if you want to get the keys to directional bias playbook, I dropped the link in the description. Grab that. It'll show you exactly how to be on the right side of the market every single time. Till next time, talk to you guys later.